as dynamic metals. And that left Jindalee as a pure play lithium company focused on their McDermott lithium project, which is currently the largest lithium deposit in North America. Is it of interest to you? Let's make him welcome and find out. Please make him welcome, everyone.
Thanks very much, Chrissy, and thanks everyone for attending. And thanks for the event organisers for putting this event on. Yes, as Chrissy said, we are very focused on our shareholders. As you'll see, management are very large shareholders in the company, so we think like shareholders, not like employees, and very focused on investor returns. So this, and as Chrissy said, we're focused on our McDermott lithium project. It's the largest lithium deposit in North America. It's an emerging style of lithium deposit. It's a sediment-hosted deposit. So the mineralisation is hosted within a volcanic crater called the McDermott caldera. That's the rim of the caldera there on the skyline. The sediments that host the lithium mineralisation outcrop, so this is the top of them, sitting along here. That's about 30 metres high, that mesa, and we've drilled it down to about 200 metres maximum thickness. So huge tonnage, low-grade deposit. They're like the porphyry coppers of the lithium world. A couple of other things to point out on this slide. The northern part of the McDermott caldera has got a long history of both ranching and mining. So over here, you can probably see there's some waste dumps. They're from a mercury mine that sits on the northern boundary of our tenements. In fact, this area produced a lot of mercury from, well, through to about the late 1970s. And also it's had over 100 years of ranching. So in the spring, the ranchers run their cattle through this is sagebrush, and they basically eat the new growth. And so it's not a pristine environment by any stretch of the imagination. It's quite degraded. So move on, the obligatory disclaimer. So look, Jindalee, as we said, we have the largest lithium deposit in the United States, and in fact in North America, with 21.5 million tonnes of contained lithium carbonate equivalent, LCE, and it's about 35 kilometres to the north of Lithium America's Thacker Pass deposit, which is the second largest deposit in the United States at 19.1 million tonnes. So this McDermott caldera is endowed with a huge amount of lithium. It's got very positive metallurgical work. We've had really high recoveries from both alkali salt roasting and leaching with sulfuric acid. As you can see, it sticks out of the ground. It's relatively soft, flat-lying sediments, so it's a very low-cost mining operation potentially. There's very strong support, US government support, for the US becoming as self-sufficient as possible in critical minerals, including lithium. And so we've got very strong tailwinds, political tailwinds there. And obviously, you know, the US is building its capacity to produce EVs internally. The production lines are being retooled for the production of EVs. There's battery factories being built right across the United States. They're going to require lithium, so a lot of support there as well. We've commenced our PFS on the project in June. Expect to have the results out in the June quarter next year. Just a company snapshot. As Chrissy said, we've been listed since 2002, so 21 years now. But we spent the first 17 years of our life as a project generator without raising a cent. We didn't go back to shareholders from our initial IPO in July 2002. Hence the very tight capital structure, just under 60 million shares on issue. Share price at the close business on Friday was basically $1.70.5, so it gives us a market cap of just under 100 million Aussie. We've got investments from companies that we've spun out, including Dynamic Metals. We hold 25% of Dynamic and Energy Metals, which was our highly successful uranium spin out. And So that gives us an enterprise value of around $90 million. As I said, look, you know, we very strongly believe in Jindalee and the potential of the McDermott project to be a transforming event for our shareholders. We've got a lot of skin in the game. I've never sold a share, I've only ever bought. And so I hold about, you know, a quarter of the issued capital. And friends and family are very large shareholders in the company as well. We've got a very good board, I believe. Justin Manalini, who's experienced in merchant banking and is also a corporate lawyer. In the last 12 months, we've added 2 directors with lithium experience, and Darren Waits, who was instrumental in the early stages of Neometals. So he's got lithium and corporate lithium experience. And then Paul Brown's also a non-executive director. He has come from MinRes, Mineral Resources, where he headed up their lithium division. In the US, we've got Brett Marsh, who's our man on the ground over there and a really experienced and competent geologist. And Carly Terzanidis, who's in the audience over there. Yep, our COSEC. And then behind the faces you see here, there's a real depth of consultants and employees in the United States, etc. So Cameron from Benchmark did a really good job just prior to the morning tea break, covering the supply-demand dynamics for lithium. So I won't dwell too much on this section, other than to point out that Albemarle have increased their lithium demand forecast, driven by the increased demand for EVs, which is probably underpinning their stance towards getting quite aggressive in the M&A front. And we saw, obviously, yesterday them increase their bid for Liontown to $3 a share. And in this one, I'll just point out that the US Department of Transportation have the sales of new internal combustion engines in the United States being phased out by 2035. I think that's probably a little bit optimistic, but it does indicate the uptake which is coming for EVs for sure. So, and this is leading into the huge number of gigafactories being built. Some are already operating across the United States. Most of them are joint ventures between mainly Korean battery makers and US auto makers. Probably one of the salient features on this slide is down the bottom corner here, where Benchmark predict that to feed these gigafactories, the US is going to need about 600,000 tonnes of lithium carbonate per annum. It currently produces around 5,000 tonnes from one operation, Albemarle Silver Peak brine project in Nevada. Albemarle are looking to increase that to 10,000 tonnes. But the obvious question is, where is the lithium going to come from to supply these gigafactories, particularly if the US is not wanting to be dependent on China, is trying to wean itself off Chinese critical mineral supply. And that's where I believe that giant deposits like our McDermott deposit and Lithium America's Thacker Pass deposit will have their day in the sun. In fact, Thacker Pass is already under construction. So. Very strong bipartisan support for the US, as I said, weaning itself off particularly Chinese critical mineral supply and becoming as self-sufficient as possible. And we're seeing this has been building since the start of last year, and it's only going to accelerate. In fact, just over 12 months ago, the Inflation Reduction Act became law. There's huge incentives there, tax incentives for people to buy EVs which are made from locally sourced critical minerals, and also fantastic amounts of money being allocated to encourage domestic production of critical minerals, $40 billion US in loans and grants from the Department of Energy, and also tax credits once you're in production. So they were slow out of the blocks, but they're really trying to, accelerate and make this happen as fast as possible. And the money is starting to flow. In mid-January, we had Iron Air, an ASX-listed company, announced that it had been given provisional approval for a $700 million loan to fund the capex of its Rhyolite Ridge lithium boron project, which is 3.4 million tonnes of lithium carbonate equivalent. I'll remind you that our McDermott project is 21.5 million tonnes of lithium carbonate. And then Lithium Americas, our neighbours to the south, announced late February that they'd received a letter of substantial completion from the Department of Energy, and they expect to receive up to 75% of the phase 1 stage of their capex as a loan from the DOE. And it's not only Iron Air as an ASX-listed company that's been the benefit, if you like, of beneficiary of this largesse from the US government. We're also seeing other ASX-listed companies that have received financial assistance as well. So a bit on the project itself. As I said, it's the largest lithium deposit in the United States. It's located at the northern end of the McDermott caldera. The caldera margin is shown here in the dashed yellow line. At the southern end is the Thacker Pass deposit. So as I said, these are the two largest lithium deposits in the United States, with Thacker Pass currently under development. We've drilled 62 holes at McDermott since discovering the deposit in 2018. We own it 100%, and the resource has increased after every drilling program, and it's still open. So clearly it's only going to get bigger. Last year we had a really successful drilling program. We drilled 21 holes late in the year. We got huge intercepts from shallow depths, both on the eastern side of the deposit, up in here, where these RC holes were drilled, and also on the western side of the deposit in here, where some of those diamond holes you can see down here were drilled. So, it was, there's a cross-section here that shows, which is basically through here, across the guts of the deposit, and this is what the resource was like. This is the resource at end of last year. So we've got indicated in yellow and inferred in red. This is a cross-section. The sediments hosting the mineralisation shown in grey, sitting on a green volcanic basement. There's a 5 times of vertical exaggeration here, so we could get as many sections in as possible. And obviously with those huge intercepts that we announced, there was going to be a significant increase in the resource. In late February we were able to announce that the total contained lithium had increased by 62% to 21.5 million tonnes, and the indicated resource had more than doubled to just over 11 million tonnes of LCE, and it's now just over 50% of the total resources. And as I said, it's still open to the south and to the west. We've had really encouraging metallurgical test work results, both from acid leaching and alkali salt leaching. We engaged Fluor to review all of our test work to date, and in March they recommended that beneficiation of the ore followed by leaching with sulfuric acid was the preferred flow sheet. And coincidentally, this is the same flow sheet that's been adopted for Thacker Pass. So we've shipped 700 kilos of core to Hazen in Colorado, and the MET test work is underway now and being managed by Fluor, and that'll feed into our PFS. We signed a MOU with POSCO. POSCO are a major supplier of cathode active material for General Motors, hence their interest in us and getting closer to us. It's non-binding, so we don't have to deal with them. It'll be on our terms. Oops, sorry, I'll just go back on that one. Just note that we've completed environmental baselines studies last year, and we're building on them, and no red flags were noted from those studies. And you can see the mercury mine that you could see earlier, a photograph of it there on the right-hand side. If there's one chart you need to remember, this is the one. Look at the size of the bubble, that indicates the contained lithium carbonate. This is comparing sediment hosted deposits in North America. including Mexico. We're currently valued at $4.50 per tonne of lithium carbonate. Albemarle's bid, $3 bid for Lionheart, values their resources about $1,140 per tonne of lithium carbonate. If we were valued similarly, we'd be trading at $427 a share. Now that's ridiculous, of course. We're comparing pegmatites with sediments, but it just gives you the indication of the value, potential value of these very large strategic projects if you can de-risk them to the point where a major company is really interested in them. So everyone should have a few Jindalee shares in their portfolio. This is what's coming up, and I think we're done. Thank you.
Well done, Lindsay. Good man. I was just talking to Shane at the back saying, Shane, do we pull the microphone now? As interesting as Lindsay is. Thank you so much, Lindsay. We're going to pause our lithium focus. We're going to delve into the potential of graphite because Australia is not a producer of graphite yet, but 3 of our states have big resources of graphite. And it's so important to the international market that the Australian government has actually classified it as a critical mineral, and they've dedicated significant resources to researching market gaps and opportunities available. So with that firmly in your mind, we welcome up International Graphite. Now they're developing a mine-to-market downstream graphite project and a proposed anode material production facility here in WA. They're led by this fellow here, a very experienced mining executive, ASX, TSX director. Andrew Worland is his name. His career spans 30 years. He's a lot younger than what he looks. But he's here to talk International Graphite, so please make him welcome.
Thanks, Chrissy. Thanks everyone for attending today, and also acknowledge Lindsay's presentation there. The numbers that Lindsay is talking about there are truly breathtaking, and that applies across the battery metals space in particular. And sometimes you've got to see it to believe it. And I had the pleasure in June of going to the Battery Mineral Intelligence Washington DC US Gigafactory conference, where all the names that Lindsay had up on the board there for the US build out of the Gigafactory capacity were there in attendance, and they are scrambling for raw materials. And so I can't emphasise enough just how important the resources are that we own in Western Australia and more broadly in Australia, and how important they're going to be over the medium to long term for the decarbonisation of the globe. And so we're sitting on assets here that are going to be worth significant value in due course, and also in the NAFTA countries as well. So our vision at International Graphite is to create Western Australia's certainly first fully integrated mine-to-market producer of graphite battery anode material. Our core assets are the Springdale Graphite Project in the southern region of Western Australia, and we have established a presence in Collie where we intend to build downstream processing facilities. Briefly on the corporate structure of the company, we listed in April of 2022. We have a market capitalisation today of around about $30 million, 6.8 million in the tin, which includes commitments from the Australian federal government and the West Australian state government to help finance some of our feasibility and project implementation works over the coming 18 months. We're pretty tightly held. Comet Resources, who are the former owner of the Springdale Graphite Project, own 24% of the company. Board and management speak for about 40% of the company issued shares in issue. The real technical expertise in the group is headed by Phil Hurst, the chairman of the company, and Dave Pass. I would regard them as the preeminent graphite metallurgists and process engineers in Australia, and they're leading the company's technical development of our projects. Just touching quickly on some of the scale that we're talking about. These figures on the right-hand side left-hand side as you look at it, of annual EV sales come from the International Energy Association. They're predicting by 2030, 45 million motor vehicles, electric vehicle motor vehicles will be on the road. That's a 35% increase in sales in 10 years. And you can see on the right-hand side there the split of how the lithium-ion battery market is supporting those particular vehicles. So just remember that number of 45 million vehicles. In terms of the graphite's role in the lithium-ion battery, Graphite makes up 95% of the anode in a lithium-ion battery. Ironically, it's can be up to 10 times more graphite than lithium in a lithium-ion battery. 1 kilogram, roughly speaking, of graphite is required for 1 kilowatt hour of battery capacity. So think about a typical, let's call it on average, a 65 to 75 kilowatt battery going in a vehicle. You need 1 kilogram of graphite for each of those kilowatts. Multiply that by 45 million vehicles on the road in 2030, and you create a demand picture of somewhere around 3.5 million tonnes of graphite required relative to a market today of 1.5 million tonnes. So in 7 years, we need a significant expansion in graphite supply. And if you look at benchmark intelligence forecasts out to 2035, 2040, that number is larger still. And as I said before, Western Australia really is at the forefront, in my view, of future supply of critical minerals to North America, Europe, and Asian gigafactories. So at a glance, the Springdale Graphite Project, 100% owned mineral resource. It's going to be a long life mine. We expect a mineral resource update out in the next week. It's all a fine flake deposit. That's important. We'll come to that in a moment. It'll be a simple conventional flotation concentrator. We're targeting a 40 to 50,000 tonne per annum concentrate production, and we'll truck that concentrate 450 kilometres to Collie. In Collie, we've completed a scoping study for the production of coated and uncoated battery anode material to treat 40,000 tonnes of concentrate input, and that would produce around 20,000 tonnes of battery anode material. We've established our presence in Collie with the research and development, micronizing and spheroidizing equipment, and we're about to scale up that facility now to support future test work programs and commercialisation of micronizing capability. So Springdale at a glance, 100% owned property. Can't go back. It's about 25 kilometres south of Ravensthorpe, the world-class Iggy's mine, the Mount Catlin mine sitting there as a wonderful contributor to the local community, as is the Ravensthorpe nickel mine. Both mines have an outstanding reputation within the community, and we are being actively encouraged by everybody in that community to develop our project with their social licence. We're on cleared agricultural land. The existing resource that we acquired from Comet Resources as part of our IPO was a 15.6 million tonne resource at 6% TGC with a high-grade component of 2.6 million tonnes at 17.5. That consisted of about 7,900 metres of drilling. I'll explain what we've been doing in the last 18 months in a moment. All the mineralisation is shallow. The average drill hole depth is about 85 metres. As I said before, it's a fine flake deposit, so all of this material will go to the battery anode market. There's no coarse jumbo flakes involved, and we don't need to understand the industrial graphite market to understand the offering of international graphite. Metallurgical test work done so far has confirmed that it's been that the concentrates from the drill core is amenable to battery anode material, and we've commenced the permitting process. So the last 12 months we've done about 20,500 metres of drilling, 273 drill holes, mostly RC, some diamond, 9,000 metres of infill drilling and extension drilling to revise and reclassify the existing mineral resource so that we're able to complete economic studies under the JORC code. Another 11,500 metres of exploration drilling has been undertaken on 4 of 7 anomalies. So that image on this slide is showing where our existing mineral resource is in the yellow highlighted components, and then scattered all around us is aeromag anomalies. We've tested 4 of those, Far West, Central, South and Mason Bay. Each of them has shown considerable graphite mineralisation. So we've had a 100% hit rate with our exploration program. In Central, we've drilled 5,000 metres in a very small area of 23 hectares. And in Mason Bay, we've drilled another 5,000 metres in an 8-hectare zone. The reason I mention that level of drilling is the existing resource of 15 million tonnes has 7,900 metres of drilling in it. We've just gone and put in 20,500 metres of drilling, of which 10,000 of that is into completely new areas, virgin discoveries. So our exploration model is being confirmed by the drilling program, And we've got an enormous amount of tenure still to be tested on this land holding. So this resource is just going to grow and grow and grow. There's some cross sections there of the drilling we've done at the two discoveries, Central and Mason Bay, showing that the mineralisation remains shallow. It's in oxidised rock. We haven't hit the end of mineralisation in any of the holes yet, and so we believe this is going to not only be we'll have a permitting benefits in relationship to the oxide material, but it's going to have enormous mining benefits in relation to the free dig component of the ore body. So what will Springdale look like? We believe at the end of the feasibility studies we will show that we'll have one product for sale, a fines graphite concentrate, sub 150 micron, that'll be specifically dedicated to the battery anode material processing flow sheet. We'll target an ore mining rate of between 250 to 500,000 tonnes per annum to deliver around 40,000 tonnes of concentrate per annum. Mining will be shallow, open pits in weathered and oxide rock, low strip ratio, we're thinking much lower than 5:1, and free dig. Nothing unique, nothing exotic about any of the equipment on site, conventional mining equipment, conventional flotation process. Turning to Collie. So what all of us in the fines graphite market are trying to do is capture that full value of our mineral resource. So as I said before, Springdale will produce a 95% concentrate. It'll be a sub 150 micron. That then is suitable for the downstream processing industry. The first step in that is micronising. We bring that 150 micron product down to somewhere between 5 to 20 micron. It's an important step because not only is it part of the battery anode flow sheet, but it also establishes it is also a byproduct from once you spheroidise your graphite. So spheroidising is about shaping. You have what's called a yield within the processing industry for graphite, which is essentially product losses. That product loss is in the form of a micronised product, and there's a market for that. And so you'll see that throughout the feasibility work that companies are doing, you'll see a byproduct credit. That's what that is. It's the micronised product from the spheroidisation process. You then take this spheroidised graphite and you purify it to 99.95%. There's a number of different proven technologies to do that. And at that point, you have an interim product for sale, and it's called an uncoated spheroidised purified graphite product. The next step is to coat the graphite, and that is then the final step, more or less, in the value chain to contribute to a lithium-ion battery. We've established our R&D facilities in Collie. As I said before, we have a micronising spheroidising mill. We've tested product on imported concentrate and shown that we can produce a market acceptable products through micronising and spheroidising with sizing and distribution characteristics amenable to battery anode material. We have a qualification scale plant arriving next week into Fremantle that was manufactured in North America. That's the next scale up in our test work program and sets the scene for us to actually explore micronised markets, which are an important byproduct from our battery anode process. As I mentioned at the start, we have produced a scoping study for the battery anode facility in Collie. These facilities can be scaled. They can be started out small and built upon and expanded out of cash flow if need be. The full coated, spheroidised, purified graphite product would be producing around 20,000 tonnes of finished product per annum, an IRR of 41%, a capex estimate of $220 million for that, and generating annual EBITDA of $100 million per annum at price decks that were based off Macquarie Bank's outlook from earlier this year, which would seem to be undercalling price relative to what many other industry experts are calling. So we're very, very comfortable with the economics and how they're shaping up. We're into now the world of demonstrating we can deliver on that. Briefly, why Collie? Probably preaching to converted in this room. Clearly, Collie is the centre of the Southwest Interconnected Grid. It'll be the centre for the distribution of renewable energy across Western Australia as the coal plants shut down over the next 10 or so years. It'll have it's got an existing workforce there, abundant skills, the southern end of the industrial corridor of Western Australia, and it's a fantastic place to be doing business when we get significant support from government for establishing our facilities there. So the state government has provided us with a grant. We're in the process at the moment of going through the Collie Transition Fund for further grants to support our activities in Collie. The federal government awarded us a $4.7 million grant back in May of this year to advance both Collie and Springdale down on the coast. So we'll continue, we think, to receive strong government support for our activities. So what's coming over the next 6 months or so? Mineral resource update very soon. Bulk metallurgical test work program is underway. A scoping study for Springdale Mine by the end of this year. Our permit is advancing. We're not having any. There'll be no showstoppers in the permitting. As I said, a freehold cleared land, so there won't be any challenges on that front. More exploration to do. There's an enormous amount of untouched areas on our properties. This resource is going to get bigger and bigger. And in Collie, test work, qualification plant arriving in the next few weeks. We'll get that operation by the end of the year and advancing our strategic partner discussions. So that's the international graphite story. I think it's a rare opportunity for global participants to invest into a key raw material that's going to drive decarbonisation of the global economies. Thanks for listening.
Thank you, Andrew Worland. Anyone in here drive a Mitsubishi by any chance? Just check your pocket and see if you've still got your keys on you, and if you don't, they're up with charm. Right. Now, Iggy Tan, do you know that name? You know lithium in Australia. It's very well connected to that one. He's been a trailblazer in the lithium industry, but he's now blazing a trail in the salt battery industry.
So you probably woke up this morning at 2 a.m. and you wonder to yourself, what is the future of grid storage batteries? No? Well, before I talk about the grid storage batteries, I want to talk about solid state technology. Who understands solid state? Well, just to give you an idea, the lithium-ion battery industry has been trying to move to solid state. And the reason for that, as you know, in a lithium battery, you've got the cathode and you've got the anode. In between is a liquid electrolyte, which is flammable. And that causes problems with battery fires. So the industry is trying to remove that liquid electrolyte and replace it with a ceramic piece. And that's why they call it solid state, because it allows the lithium to go through the ceramic piece without the liquid electrolyte. So that's solid state technology. Who in this room has EVs? Yep, a couple of people, yep. Obviously, one of the safety concerns with EVs is that a lithium battery fire. It's actually a thermal runaway, very difficult to put out because it generates oxygen at the cathode end. So in a normal fire, if you douse it, take oxygen away, the fire stops. But in a lithium-ion battery fire, it just keeps going. So that's one of the concerns with lithium-ion batteries. And the other concern is that lithium-ion batteries only operate in a very narrow temperature range. So when you get to cold climates, at 0 degrees, your battery capacity drops to 70%. And the reason for that is the liquid electrolyte becomes viscous and the lithium reactions slow down. So it's not great in very cold climates or in desert conditions. Also, the lithium degrades every time you charge and discharge the battery. So there's a limited life. So you would know in your iPhone the life of a lithium battery, but in bigger batteries, probably 8 to 10 years. We've seen the price of lithium jump 5-fold in the last 3-4 years, and that's causing some concern for the lithium-ion battery industry. Cobalt is another issue. There's ethical supply issues because 70% of cobalt comes from the Republic of Congo, and there is child labor issues and so on. So ethical concerns around cobalt. And then graphite, about 90% of graphite comes from China. That represents a geopolitical risk because one country supplies all that material for the lithium-ion battery industry. And then finally, copper. There's 2.5 times more copper in an electric vehicle than an ICE vehicle. So there's enough studies that show there's not enough copper mines being developed. So is there a battery that is lithium-free, totally fireproof, operates in a very wide temperature range, more than 15 years life, no cobalt, no graphite, sorry, no copper and no manganese. Well, introducing you to the Serenergy battery. It's basically a salt battery with nickel powder, and it's solid state technology. So solid state, remember, is that ceramic bit. The technology was developed by the Fraunhofer Institute out of Germany. They spent nearly 35 million euros over 8 years in development, and we have a joint venture with them. So essentially, it's a sodium chloride solid state batteries. Totally fireproof because we don't have that liquid electrolyte. It's a solid state technology. Operates in a wide temperature range. It can operate down to -40 degrees and up to 60 degrees in the desert. And the reason you can do that is because internally the battery operates at 270 degrees. It's fully insulated. You can touch it with your hands on the outside, but it has a temperature mechanism. So when you charge the battery, it's endothermic, and when you discharge, the battery is exothermic. So it maintains the temperature. So it operates in a large temperature range, and the life of the battery is more than 15 years because the sodium doesn't degrade, and it uses common table salt. Now, if you remember the chemistry from your high school days, sodium is actually very reactive. It sits under lithium in the periodic table. So that's what we use, and we use nickel metal powder. So it's lithium free. We also don't have any cobalt in the chemistry, so we don't require cobalt free. And the best part is we don't have an anode. It's a self-forming anode. So we don't have any graphite, and we don't have any copper. So this is how the battery works. Very neat technology. It's essentially a ceramic tube. In the middle of the tube, we put salt and nickel metal powder. There's a positive probe. We also use a medium like a sodium alumina chloride medium. But this ceramic material sits in a metal canister, which acts as the negative part of the terminal. So that's what it looks like. So essentially, that's what it looks like. 250 watts, same power as one of your solar panels on your roof. So the battery itself compares very favorably to the lithium iron phosphate battery in energy density. But the most important thing on that table is that the maintenance cost is virtually zero. So in a Tesla Megapack, there's 240 cooling fans and 2 air conditioners trying to keep that battery cool. So in your EV, some of the energy is keeping batteries cool. In our batteries, we don't have any cooling fans. So where does it sit on the power curve and the energy curve? So this is a graph where the bottom part is the amount of energy you can transfer, and the vertical axis is the amount of power. So the lithium iron phosphate is the red area. The top part of that is all the nickel cobalt batteries, lots of power in the lithium battery. The bottom part is the lithium iron phosphate battery. So as you know, Tesla are now moving to LFP batteries because they're cheaper and they're safer. So we sit in the middle. Our market is the grid storage market. So this is the current market where solar panels are producing electricity, wind is producing electricity. But do you realize that 3 billion every year of renewable energy is discharged to the ground in California, and 2 billion is discharged to the ground in Germany? Essentially, we can't use that energy during the day when demand is down, and so they discharge it to the ground. So in Australia, I read an article, about 30% of renewable energy is just discharged to the ground. It's a waste because there is no storage. And so essentially the solution is grid storage. Essentially, they are very large batteries that sit on the grid and allows you to charge during the day and then discharge at night. So it's just energy shifting. Who's got solar panels at home? Well, all the excess energy you're putting back to the grid, you're probably getting 4 cents during the day, and you're buying it back at 30 cents. So it doesn't make sense. The grid storage market is the market you want to look at. It's growing at 28% year on year, expected to be about 150 billion by 2035. And even Elon Musk, my mate Elon Musk, says that their future of their battery industry is in the grid storage market. So we are ready to commercialize this technology. This is some of the vision of the pilot plant that was built by Fraunhofer. They spent nearly 25 million euros developing this technology. And you can see some of the batteries there. So that yellow unit is a 10 kilowatt pack. They've been producing it over the last 2 or 3 years, and they've been going through test work. So our job is, in a joint venture, to commercialize this technology and to build a 100 megawatt plant. So you can see here some of the alumina being mixed. You can see this ceramic tube being made. The technology is making that ceramic tube and allowing lithium ions to go back and forth. So very exciting technology, and we've got a 100 megawatt plant that we are building in Saxony, Germany, which is the east part of Germany. We have the land, and essentially we're completing a DFS by the end of this year, and then we'll be looking to get that funded. So what does a battery plant look like? Well, we have to produce one of these from scratch, one every 45 seconds. So something like 480,000 of these units a year, very much automated and robotics. And Germany is the best place to do that because they have a lot of technology. What were the battery costs? About 40% cheaper. Why? Because we don't have any lithium, cobalt, we don't have any graphite, we don't have any manganese, and we don't have all those critical materials. Our first product is actually a 60 kilowatt pack. This is what it looks like. 600 volts, 100 amps. And on the side of them, there are 5 shelves of these units. One of the things you notice is there's no cooling fans on it. Unlike a lithium-ion battery, they're cooling fans. These batteries can sit in the snow and operate well. And what we're doing is taking these batteries and we're putting it into a sea container configuration, which is our 1 megawatt grid pack. And the idea of that is you can deliver it on site very easily on the back of a truck, drop it on the deck, plug and play, and immediately you've got 1 megawatt connected to your grid. So we are taking orders for these 1 megawatt packs. If you want one for your house, no, I'm only kidding. So thank you for your time. On time as well.
Oh, God, you had 3 minutes. I'm impressed, Iggy. You've got so much to say. It's an interesting concept, isn't it? While Iggy was talking, I was actually doing a little bit of searching and looking at the solid-state batteries and testing and everything. There is a lot to read about there. Right, recent news from our next presenter, who is just back. It would have it from an international tour where he has been wowing global investors. An announcement this morning, mapping the tenement for pegmatites, 10 Ks of strike. Now, I actually asked the boys at the booth what they love about their little area, and they said the prospectivity. It's the prospectivity that gets them all excited. That 10 Ks is just one zone. There are plenty more zones where that one came from. So here he is. Welcome him up the front there. This is ED Tom Reddicliffe from Greentech Minerals. Would you please make him welcome, everyone?
Good morning, everybody. As the name says, Greentech is chasing the battery metals, and I'm here to tell you about what we've been up to for the past year. It's a small company. listed on ASX in January 2022. Focus, as I said, is battery metals, and small experienced executive team. The two guys there on the left is, sorry, the wrong button there, have a vast amount of experience in the corporate and mining sector. And we've got a broad range of together mining industry experience, portfolio of good quality exploration assets, and I guess our two main achievements over the past 12 months or so is we've increased our resources, or doubled them, at our Wandoo flagship copper zinc project to 6.2 million tonnes. And more recently this year, back around May, we discovered a significant lithium pegmatite swarm with assays returning as high as 3.6% lithium oxide. So there is the pulse of the company, I guess. We've got nearly 70 million shares on issue, a few options. Market cap varies a little bit, around 28, 30 million. And we have cash at bank around $4 million. You can see there in the performance of the stock there. This is off the back of copper results at our January prospect at Wandoo. But here, this is where we've entered into the lithium sector with the discovery of lithium-bearing pegmatites, and had a profound effect on our stock price, as you can see. Shares tightly held. Top 5 got 33%, high net worth individuals. Artemis Resources have got a stake in the company because a lot of these projects were spun out of Artemis Resources in an IPO back in early 2022. Now, where are all these projects? We've got lithium in the Pilbara, up top here, okay, and copper. We've got copper up in it's also in the Pilbara, so we very definitely have a focus in the West Pilbara. We've got nickel as well on some of these projects down to the south here, and also we have a nickel resource, in fact, in the Pilbara as well. There are tenements, and we'll just talk basically around the West Pilbara projects at the moment. Okay, we've got over 200 odd square kilometres in our tenement package here, and just for reference, we've got the Azure tenements there. We'll talk about later, and Illawarra related company. Okay, but the whole region through here is prospective for mafic intrusion-hosted nickel sulphide deposits, VMS copper zinc deposits, and also, as you would know, there's a lot of activity in the lithium for lithium pegmatites, and this has been led, of course, by Azure with their quite spectacular discoveries. So our lithium there is just down the road, really, from Azure. Over in here, we've found a couple of significant lithium pegmatite trends with grades up to 3.6%, particularly in the southern trend. Our copper project is further to the south. It's about 40 kilometres south of Karratha. You can see in there copper zinc, and with resources of over 6 million tonnes, which we were actively focused on, have been until we've also taken on board our lithium search. As well as that, we've also got nickel resources, and it's here at Ruthwell, oddly enough, and in some ways similar to Azure. We're in there looking for nickel, but there are in fact lithium pegmatites there. So there's a modest resource, 265,000 tonnes, about 0.5% nickel sitting in there. So why are we chasing? And we'll talk more about lithium, of course, because that's where most excitement is these days. This one, you don't have to be told, they've predicted shortfall in the supply of lithium by 2030. So we believe we're in the right market and the right location, and Tier 1 mining jurisdiction in WA. and we have taken on the right advisors as well. A lot happening in this region, just briefly. Lots of mergers, acquisitions and so forth, and West Pilbara is not immune from it. See here, SQM have been chasing Azure. Okay, these other ones in other parts of WA, all trying to get access to good lithium projects. So in terms of our getting advisors, we weren't experts in lithium, but we were smart enough to know what we didn't know, and we've engaged the Obsidian Metals Group led by Michael Photius, who is an experienced mining executive and geologist with a long history in the lithium sector. Okay, evaluated, developed the Galaxy owned Mount Catlin spodumene deposit, and on the corporate side, you know, Galaxy's market cap was 10 million. He managed to grow that with his team and so forth up to 2.5 billion, went on to merge with Allchem, and finally Livent with a $15 billion deal. So we believe we're now getting the right sort of advice and assistance from Obsidian, and we can leverage off their expertise in terms of both exploration and corporate strategies. So a little bit more information on our lithium deposits. Okay, these are only 25 k's down the road from where Azura. Pardon me, and we're not saying everything extends up to Azura or whatever, but there does seem to be, superficially anyway, a zone of pegmatites through here, lithium-bearing pegmatites running through here, of which we've got a substantial portion of. We found confirmed two significant lithium pegmatite trends to date, which we've sampled and have results for. We've confirmed that it's spodumene is the main mineral, lithium-bearing mineral. Collectively, there's 10 kilometres of strike. The northern one have assays up to 1.8% lithium oxide. The southern one assays peaked. There's only a few assays from there, but 3.6%. What we find, I guess what we find exciting, I guess, is that the grades are persistent. You can go to one end, this thing here is 7.5 k's long, you can get 1.5% lithium up this end. Go the other end, similarly get plus 1% lithium oxide. So we'd have to, we'd like to think that we would have to be exceptionally unlucky for us not to find something of significance in these trends. Just looking in closer, this is the northern one we call Kobe. It varies a little bit from 4 to 7 metres wide. It tends to be, it's not continuous, but it is fairly continuous down this end of it. We've traced it till it went undercover down in here. So there's some of the grades and so forth. The background here is historic soil sampling, which we've put together, and it complements where we go in there and find outcrops and so forth. So you get these purpley areas and so forth. In particular, there's no you'll find lithium-bearing pegmatite. We've got a lot of outstanding results pending. We've got hundreds of rocks in the laboratory for areas outside of these trends. So the southern area there, you can see it's through here. That's as far as we know about at the moment, but like I say, we've got a lot of information coming in and expecting assays as well, because we've been searching the rest of the tenement and sampling. You can see there a little bit more detail really. Just shows you where this is outcrop is down. It's not actually right there, but this one is just in here, in close. And you can see in this area here, the zone, the soils say it's much wider, and sure enough on the ground this is about 40 odd metres wide. So we've been chasing it. There's been a lot of mapping sampling, as I said. So we got hundreds, if probably more than that now, samples in the lab. Okay, we've got multiple POWs approved and to allow drilling to be undertaken, and we're now just trying to get our heritage surveys underway, and once that's cleared, we would anticipate hopefully that we'll be drilling by, well, sometime in October. Now, just our, I guess our second, was our second flagship project, used to be our first one as well. This is Wandoo, only 40 k's south of Karratha. Previously mined, you can see there, Wim Creek took out a modest a parcel of ore. In here, okay, very high grade. This is out of the oxide zone, out of these this little pit. And there's another pit there, West Wandoo. Fox took out 150-odd thousand tonnes, again, 25,000 tonnes at 20-odd% copper. And this is what the body looks like. Oops, sorry, get back. That's the main ore body. It's been drilled out. There's a resource there. Tapers off down here as you go down dip. Grades drop off. But underneath it was another mineralised zone. And it thickened out just down here. And we'll talk about these in a minute, but we can see here quite good grades, gold credits as well. 10 metres is over a gram. It's not a gold mine, but certainly good gold credits. Now, the early drilling, we've focused on targeting resource growth. This here is West Wandoo pit. The East Wandoo pit is just over beyond there. That's about 2 kilometre strike. These, the mineralised areas is light up on EM, okay, both moving loop EM, ground-based, and airborne. Okay, and these are the deposits that are there, 6.2 million tonnes over 1% copper. If we just go to this one, this is the target we're particularly interested in at the moment. We're chasing. This is East and West Wandoo, they're quite tiny. There's a very large EM response in here, which relates to this thing down, we believe down here, and this we believe can significantly grow the resource. So it could potentially eclipse Wandoo in terms of size. Okay, what's coming forward in terms of news? Okay, we're currently working at Ruthwell Osborne on the lithium. We'll be targeting getting our drill sites ready soon, and we expect to be drilling in this period here, October, November, and towards the end of the year we'll probably do a little bit more drilling at Wandoo. So positive outlook for us. Okay, drilling to commence shortly, hopefully at Ruthwell. Okay, and we expect that to drive the company value. But we do have another, I guess, ace up our sleeve as well, that we expect Wandoo with the potential to boost the company value as well, with increasing demand for copper expected in the coming year. We have adequate funding at about 4 million. So investment proposition, good quality projects, substantial exploration upside, close to potential processing facilities. Thank you very much. And a disclaimer.
Good on you, Thomas. I know you're under a bit of duress there. Go and grab yourself a cup of tea and some honey in it, or I'll come and find it for you later. Good on you. Right. Now, if you've been watching any of the press this morning, you will have seen a little bit about our next presenter up on stage and the company. They've been all over the place. Last hour, 2 hours, 4 hours, there have been multiple little reports on them. Lithium Energy. being approached by multiple major third parties active in the EV battery sector, seeking strategic partnerships or investment opportunities. That's the majority of the headlines. So aren't you smiling more than what you're doing now? That's it. Smile. This is William Johnson, everyone. He is the Executive Chairman of Lithium Energy. As I said, a battery metals developer, progressed assets in Argentina and Australia. He's got a couple of years of experience under his belt, which is Mr. Lithium, Joe Lowry always said, is really important in this particular field. So they've got assets, they've got lots of interest, they've got lots of experience. Let's see if it's something you'd like to invest in.
Thanks very much, Chrissy. Okay, that one's not, yeah, fine. Yeah, that's fine, take it. Thanks, and thanks for the challenge to keep your attention for the last 15 minutes before lunch. So I hope I can do that. Okay, so why is Lithium Energy uniquely positioned and ready for the global energy transformation? What makes Lithium Energy unique is that we're one of the very few companies listed on the ASX that provides investors such as yourselves with investment exposure to the two most important minerals for EV batteries, being lithium and graphite, through our lithium project in Argentina, the Solaros project, and the Burt Graphite project in Queensland. Why lithium and graphite? Well, I'm sure you're all very familiar with lithium, but graphite also is equally, if not more important in today's EV batteries. Contrary to what Iggy would have you to believe earlier, the future is very much about lithium and graphite for EV batteries for the next decade or a couple of decades to come. And graphite in particular typically can make up at least 50% by weight with graphite and graphite-related products in a typical EV battery. So both lithium and graphite are key ingredients for EV batteries moving forward into the future. If you're looking for a long life, high margin lithium project, there's no better place in the world to look than South America's Lithium Triangle, where most of the world's reserves of lithium are currently found. Within that triangle, there's no better country, we believe, than Argentina. Bolivia has a great deal of sovereign risk. Chile is starting to look at nationalizing some of their lithium projects and putting obstacles in the way of investment in developing those projects. Whereas in Argentina, the government at both the federal and state level are very, very supportive of foreign investment coming in to develop new lithium projects, and there's already a raft of projects there already in production. Importantly, lithium brine projects from Argentina typically tend to be in the lowest quartile on the lithium cost curve. So we've chosen Argentina, best country in the best region in the world to develop a large-scale project. We also happen to have prime position in one of the best salt lakes in Argentina. The Olaroz Salar is located in northwest Argentina. There are three companies that control the lithium rights to this salar: Allkem, Lithium Americas, and Lithium Energy. So why is the Olaroz Salar so important? Why is it so well suited to lithium production? Well, Allkem have been producing lithium there since about 2015. They've just invested in upgrading their production facilities from 13,000 tonnes per annum up to 40,000 tonnes in joint venture partnership with Toyota. Lithium Americas have just spent $1 billion building their 40,000 tonne per annum facility just a few kilometres south of our properties. Excuse me, my mistake. The ground held by Lithium Energy is shown here in red. This is a substantial land holding of 12,000 hectares. The yellow here is the ground held by Allkem, and the blue here is the ground held by Lithium Americas. So you can see between the three of us, we've pretty much got that whole salt basin locked up. This is currently where Allkem are producing their lithium brines from their evaporation ponds. These are their production wells, and Lithium Americas are just off the chart down here in the neighbouring Cauci salar. So you can see from this picture that we are directly adjacent to the current production facilities of Allchem and very close to Lithium Americas as well. So we've got great neighbours, we're in a great location, and it's been demonstrated that conventional pond evaporation works very well from this salar already. Back in June, we established our maiden JORC resource of lithium at Solos of over 3 million tonnes, 3.3 million tonnes of contained lithium carbonate equivalent. This was after an extensive drilling campaign and series of geophysical surveys. To put that level of resource into context, if you have 1 million tonnes of lithium carbonate equivalent and you're producing at 20,000 tonnes per year, there's potentially 40 years of production there. If you're producing 40,000 tonnes per year, there's potentially 20 years production there. That's for 1 million tonnes. We've got 3 million tonnes. Looking at it another way, if you compare lithium brines to spodumene projects, our resource of 3.3 million tonnes at an average grade of 310 milligrams per litre is roughly equivalent to a spodumene deposit of 100 million tonnes at 1.3% lithium. And that's only the beginning. The resource that we've established so far is just based on 5 holes out of an initial drilling campaign of 10 holes. So we've got more drilling to do and potentially more resources to find. We're currently in the process of finishing a scoping study, which Chrissy mentioned earlier on, and I'll talk a bit more about that in a few minutes, along with the discussions we're having with potential partners. Some of the great features of the Olaroz Salar are that apart from having great brine chemistry, which has been proven to be very suitable for production of lithium carbonate by Allchem and Lithium Americas, is all the infrastructure there. There's paved roads all the way from San Salvador de Jujuy straight to the project. We have a gas pipeline that runs all the way through our concessions. We have fresh water we've identified within our concessions themselves. So we have all the components that are necessary for a great lithium brine project. We've also determined through the testing we've done on the brines that the brines that we're pumping from our wells are very, very similar in chemistry to the brine that Allchem and Lithium Americas are using to produce their lithium. It's not surprising because it all comes from the same underground aquifers, but it gives us greater confidence to move forward in the development of this project. One of the, apart from the high grades, the low magnesium to lithium ratio is a key benefit with these kind of brines because having a low magnesium to lithium ratio reduces the cost of production. As we're progressing with the scoping study, which is nearing completion, we're very pleased to report that the study work we've done to date confirms that the quality of the brines, the chemistry and their grade is very suitable for using conventional pond evaporation, which is really important because our neighbours, Allchem and Lithium Americas, they've both proven that works, so it significantly de-risks the project execution from our perspective. We have a very large land holding, 12,000 hectares, which is more than enough land to put ponds on our properties big enough to support pond evaporation production of a similar scale to our neighbours. But there are alternative technologies now being developed. Direct lithium extraction is one, and DLE, direct lithium extraction, does provide some significant potential benefits, being the possibility to move into production quicker, potentially lower capital costs, and also better recoveries. Typical brine projects have recoveries between 50 to 60%, which means that potentially you're leaving 40% of the lithium in the brine, whereas DLE recoveries can be between 80 to 90%. So in the long term, there's significant benefits to be considered from looking at DLE. So the work that we've done to date, we believe puts us in a really strong position compared to many other brine projects, in that we know that we have a choice of technologies. We can either use a conventional pond evaporation used by our neighbours, or newer DLE technology, or even a combination of the both. We've, before I go on to this slide, recently we signed a deal with a Chinese company called Lanchen. They're one of the leading providers of DLE technology in China, and they were so impressed by our project and the potential of it and its location they've offered to buy and to build us a demonstration plant at SolarOz for free. They're going to build the plant, pay for it, build it. If it works and we're happy with it, we can buy it. If it doesn't work, they'll take it away. So that's a fantastic deal for us and really just reinforces, I guess, the high quality nature of our project and in particular the location. There's one of the key things we're having to do to advance the project quickly is build up the team. We've got a team of over 20 staff that we've built up over the last year, mostly locals from the state of Hui who have previously worked in the lithium industry. We're very pleased to have recently appointed a new general manager there, Senor Raul de Lena, who used to be the operations manager for Lithium America's joint venture company, Minera XR, at the Olaroz Solar. Now that's really important for us because Raul was one of the key people involved in building their project, which has just been commissioned. And so the experience that he had locally in executing that and over the last 4 or 5 years, taking a project from studies all the way through to production is going to be very important to us as we advance our project going forward to a similar stage. So where are we currently at? As mentioned, we're working with Hatch to complete the scoping study on the SolarOz project. We're going to continue drilling. We're drilling currently holes 7 and 8 of our initial 10-hole program. After those diamond holes, we'll be looking at drilling some production test wells. We're also starting some of the laboratory test work, some evaporation testing with some ponds on site, and doing all the normal things you do to fast track projects like this into production. As Chrissy mentioned, we have been, I can confirm we have been approached by some large and some very large potential strategic partners who are active in the EV space and who are very interested to participate with us moving forward. So we are going to continue to advance with those discussions, and if they advance to a particular stage, we'll certainly advance or let the market know at that point in time. So that's lithium of my 15 minutes. I think I've got 2 minutes left, so only 2 minutes to apply to graphite. That really doesn't do it justice because we really have an exceptional project in Australia too, the Perth Graphite project, where we've got a contained resource of over 2.6 million tonnes of really high-grade graphite, which is really important for the battery industry, as I mentioned at the beginning. Our aim here is to develop a vertically integrated business here in Australia that will produce battery anode material, specifically purified spherical graphite. There's a huge potential demand for this project, for this material, heading our way, and we're ideally placed to satisfy part of that demand, being located in the low sovereign risk jurisdiction of Queensland. And one of the key benefits that we see from this location is the availability or potential availability of government funding. You would all have heard of the government incentives now being put in place to promote downstream processing of materials, and we would much rather add a lot of value to the graphite we're going to dig out of the ground here in Australia than package it up and send it overseas where others are going to add value. So we're really focused on taking this all the way through to being able to produce a very high quality, high value, battery grade, purified spherical graphite material for battery anodes. Briefly, the projects are located in near Cloncurry in Queensland. As I mentioned, we've got 2.6 million tonnes of contained graphite between 2 distinct deposits, the Perth Graphite deposit up there. And with that deposit, we have over 9 million tonnes with an average grade of 14%. Now, to put this into context, most graphite deposits around the world typically have grades of 4 or 5%. So we have double or triple the grade of most other graphite deposits around the world, which is a great starting point. At our Corella deposit, about 100 kilometres south, again, we've got very high grades, good quality graphite, and this deposit is potentially going to add significant additional inventory for the PSG plant as we advance through the pre-feasibility study that we're currently working on and are aiming to complete by the end of this year. I can see you're getting a little bit edgy there, so I'll just flick through the next couple of slides. Very briefly, corporate overview, just over 100 million shares on issue and market cap about $60 million at the moment. We've got a really good team on board. I mentioned Raoul before as our newest addition. And to sum up, if I may, Lithium Energy, uniquely positioned to take advantage of the global energy transformation. Lithium, graphite, they're the most important. You can't have EV batteries without them. We've got two great projects, a lot of news flow coming out in the next 6 to 12 months. So if you're not invested in the company now, buy some shares. Thanks so much.
Well done, William Johnson. All right, team, that's it. You've got some more great prospects after lunch, but you've got 45 minutes now